What's up, everybody? I got about less than a minute to the futures open. Oh, actually, they're open. Where's all my sounds? I don't hear anything on my end. This is annoying. I moved all the program sounds to the other computer, and I don't hear anything. This is awful. Hold on one second. Let's try again. Oh, there we go. Still don't hear nothing. Anything. No. Yeah. I'm not even talking about myself. I moved all the ticks and all the sounds to one computer, kind of clear some space up, but I don't hear much going on. I hear a couple of ticks here and there. There they go. I don't know. I'll check that out later. Don't mind me. Just talking to myself. What's up, BS? All right. I know there's obviously you got the WrestleMania going on tonight, so the majority of people will be watching this on recording. I'll be as brief as I possibly can. I know I have a tendency to say that a lot, but I understand many of you are watching this on recording, so I'll try to keep it brief. Quickly running down some opening lines here. Futures up a little bit, so seeing a little more follow through to that violent squeeze we saw at the end of the week. Dow up 80, ES up 11, NASDAQ up 30, Russell up a few, 5. Bitcoin was rallying over the weekend. Yep, plus 1,800 here. Let's see, where's she? Yeah, trying to get above that high from late last week. Gold seeing a little more green. That also had a violent snapback. Silver green, crude, a little red there. I haven't really heard much on the Iran front. I think they met again. I think that Trump's son-in-law went out there to meet. But it's been pretty quiet. So that's good. What else? Dollar up a little bit, and yields look like they're flat. All right. Let's get into it. And it'd be a much different conversation tonight if the squeeze. Now the ticks I hear. Hold on. If the squeeze on Friday wasn't as strong as it was, okay. But again, if in this market, tiny little word means everything. But the reason probably why we saw such a significant squeeze as information came out throughout the afternoon, there was a lot of panic. There was a lot of panic selling into the Wednesday, Thursday sell-off, primarily on Thursday. Yeah, you got some of the data from like Goldman Prime, JP Morgan Prime, a lot of the prime banks in regards to positioning, fund positioning, hedge funds, and et cetera. There was a violent and aggressive sell side flow on Thursday, and a lot of it shorting too. A lot of it shorting. So I think probably, again, I'm guessing, there's no actual proof to it, but once some of the people who had access to that information early on Friday got wind of it, that set up perfect squeeze opportunity, right? Again, I'm not saying all of the squeeze we probably would have squeezed, but I think once that information started to circulate, it added just more fuel to the fire. It got, and when I say panic, it was legit panic. Where is it here? I have here's one thing I like to look at. And then this is kind of one of the big problems in the market now. because this information, more people have access to this information. Um, it used to be just mostly pros. Now retail has just as easy access to this information. But I think here's Friday, right? Let's see. Yeah, you can make it out here. One, retail, which usually has been the buyer of the dip, actually did some selling. Okay, and that's what you, if you can make it out here on this chart here, um, you can see the little, to the downside, the little drop there, right? So usually retail's been buying dips, and when they sell, that marks a nice low the majority of the time because you get that kind of capitulation from the entire crowd. Here was the thing that really caught my eye. The panic indicator, which I love to look at, because this, I would say over the past, I would say since the April tariff low, basically the liberation low. That's the term I was looking for. Um, you get these really wild moves on this panic indicator that usually would take some real deal selling to see these type of moves. You have a little VIX influence in this indicator as well. It used to be called, I think, the vol panic indicator. It might still be called that. But you can see the spike here, right? So we get this update late Friday afternoon. And again, people who probably had access, Goldman putting it out, word gets out that you get readings like this off the little bit of sell-off market wise. Again, in pockets, it was a lot more aggressive. But you had a vol panic indicator you usually see at market bottoms, right? So I think we got over the weekend, we got a lot of the reasons why the squeeze was as strong as it was. And the truth of the matter is, because the question now becomes, how much is left? You got some squeeze left, no doubt. It's not like, in other words, that whole panic has been unwound. You just, again, if you kind of got just a normal little green day on Friday, you'd be set up quite well for a strong snapback rally going into this week. All right. So now with some of it kind of already having manifest to close out last week, how much is left becomes the question, right? So again, before we get into the overall market setup, because it's been a really confusing backdrop as we've been talking about ad nauseum. Let's get into kind of where the squeeze may sit right now. The stuff I kind of like to look at, get correlation was, I think, one of the things I was most concerned about, if you remember, before we got them sell, because it was dancing around actually below that 8 level. I'm referring to 1 month implied correlation. So you got some wiggle room, right? Got up to as high as, I think it was 17, 18. And now you got some room again, probably another up day in this market. But you do have a little bit of wiggle room before this becomes an issue again. But the main takeaway is that it's going to become an issue again, right? Another day, another quarter of what we saw on Friday. I'm talking about magnitude behind the rally, and you're likely to be dancing with an 8 handle again. Okay. But you do have wiggle room. We're not at an 8 yet, which would be even a bigger issue. Okay. So you have some room there. Another thing too, again, you get panic signals, and then you look at internals and you see this, right? So it just tells you, just a reminder what kind of market we're dealing with here. You got a panic buy signal on Thursday. You got tactical sentiment on buy signal off the selling on Thursday. And this is kind of what the internals and breadth look like right now. You got several major groups here, major pockets that are cooked, are flat out cooked. Energy, materials, staples, utilities, industrials, right? So you got major pockets of this market that are nowhere near kind of where the shorting and the panic has been, right? And we're kind of we know that already. This is not new, But I think ultimately to get the kind of setup we want for a squeeze, where we don't have to concern ourselves in a day of whether we're going to lose that squeeze, you want to get a pullback where gets cleansed across the board, right? Especially the stuff we want to buy. Like, ironically, right now, where is the squeeze opportunity based off this? It's in the stuff we don't want to buy. It's in the stuff that has been overcrowded, and now they're all trying to get out the exit at the same time, and that's what's creating the panic. So while there is likely going to be squeeze opportunities in a lot of those areas, you do have some of those names reporting this week as well to keep an eye on. The strength of the market, the health of the market, price action wise, flow wise, everything wise, has been in the same stuff. And a lot of that same stuff has come a long way. That's kind of the issue here. All right. So again, there is room for more squeeze, no doubt. I'd be careful chasing green, especially in some of the hotter areas of the market, as you can see here. But me personally, I'm scared chasing green in the other areas of the market as well, even though they're not overbought and they're oversold. Just because, again, big picture wise, they're crowded. They've been crowded. So that's kind of the problem we got here, guys. Unfortunately. Here's another little different wrinkle here, what we've been keeping an eye on, the vol control sensitivity indicator. So can get everybody caught up quickly, briefly. What this is showing us is you got vol control funds that got their full exposure, they're loaded up, okay, short side VIX, long side equities. This indicator tells us if we're near the time where they're going to be chasing VIX strength or be selling into VIX strength, okay? This has been hanging around the zero mark, which has been telling us that they're more inclined to sell into the VIX pop than chase the VIX pop. Okay, and that's exactly what we've been seeing. Right? You get VIX, you get vol to pop, possibly for a day or two, and then boom, sellers come. I talk about sellers Friday, aggressive selling in VIX, right? In those volatility products. In my opinion, I think that was the main driver of juice on Friday. What this is showing us now is we're getting away from that now, right? We're starting to move away from it. Now, again, I think the next stage here in this indicator, in this reading, is going to tell us a lot. Do we cross above that 6 range, right? And that's kind of where we were earlier in 2025 before the tariff correction, okay? Because we had a different setup then, as we've been talking about. As opposed to where we've been hanging out around zero. Right now, you got, what is this, a 4 and change 5 reading? So that's right in the middle there, right? That's right in the middle there. And I think the next update, the next change in this is going to tell us a lot. Okay, it's going to tell us a lot. Again, below zero is one of the best vol sell signals I've come across of recent, right? A lot of times market lows, VIX highs in market pullbacks and corrections, you get this under zero, okay? Because again, just to reiterate, what it tells you is that even though VIX is continuing to strengthen, now these guys are selling into that strength. They're no longer chasing into that strength, okay? They're selling in all markets. So that's why it's been so good. And unusually, this has been unusually low, while this market has been bullish and VIX has been kind of, just hanging around doing nothing. All right. So something to keep an eye on there. What else is different? Here, right? I mean, how much room do you have here? Here's short-term sentiment comp. We're back above 65 now off the Friday rally. So again, do we have some squeeze left? Yeah, sure. are the NASDAQ names and possibly a lot of the more speculative names, NASDAQ growth names, whatever label you want to put on them. Can they continue to remain squeezy? No doubt, because again, this is where all the selling has been. But as a market whole, you get another green day or two, right? You get another up day or two, and you're right back at short-term sentiment levels that we really didn't feel too comfortable with just a week ago, 2 weeks ago, whatever it was, right? So not a whole lot of room here for comfort. Tactical sentiment, which was on bull signal, so it had more ground to make up, got a little past neutral, right? So Thursday, this went on bull signal after the market on Thursday, so the Thursday selling. Then you had the gap up on Friday. What was okay about the gap up on Friday is that you had a chance to still play for squeezing upside. Sometimes you get the gap ups and you miss the whole move. There's nothing really much else to do. But again, those gap ups are annoying. They're annoying with these short-term sentiment signals. Market meter, this is kind of a little the breadth involved there. More neutral, so a little less heated there. Okay, so that's where short-term sentiment kind of hangs out as we go into the week. Let me show you where, and you guys probably have seen it. Zero Hedge just posted on this. Here's kind of what hedge funds were doing on that Thursday selling, and here's where it is. All right, so tech is caught the brunt of the selling, basically caught all of it. This is U.S. single stocks shorting, so weekly short trading flow spike there, highest in a long time, highest ever, I think they said, highest reading ever, magnitude of short side flow, which is remarkable. But again, we have to remind ourselves, because it's so easy to just fall into the trap and say, well, yeah, you're getting highest ever shorting and the market's at new highs. Yeah, the certain indexes are at new highs, but the stuff that everybody cares about, the stuff that everybody is in, a lot of it's getting its teeth kicked in. No doubt you have a correction, if not been in a bear market in a lot of these areas. Right? And now, you got Bitcoin pain involved. If you don't look at the indexes, and we've been talking about this for weeks, months now. I talk to other people, just your normal retail traders out there, and they've been crying the blues for a long time now, complaining about this market. So you got a lot of damage out there. This is software, which has been an all-out crash, right? So major technology sector, all-out crash. So this is where all the pain is. Now, what usually, and you guys know, like, I'm a contrarian by heart. Normally, when I see markets showing these type of things, I almost always flock to that stuff and look for long opportunities. Right? Always. And you guys, those of you who know me, know exactly what I'm talking about. I think the difference this go around, right, is that the stuff that this is referring to being aggressively sold has been overly bought for a while. And I think that's the tug of war at play here, is that on a short-term basis, you have, possibly all sides on the short side that can get squeezed 100%, but you still got crowded money in these things, and here's the big thing for me too, right? Because you look at all the other stuff and think about kind of the groups we've been talking about over the past few months. You got major breakouts in the stuff that nobody cared about. I mean, did you guys, and why would we, right? This is not the stuff where you want to look at and get excited. I don't know if you guys have taken a look at the trannies recently, but they are on fire, right? We talked about like FedEx, UPS. They continue to be on fire. So, money's coming out of that crowded stuff and being deployed in these other areas. So again, I'm trying to find the right words to explain the problem, but the question becomes like, do you go to the, because 19, here's what I'm getting at, right? I get deja vu of 99, 2000. Okay. And when 2000, the tech bubble popped, okay, everybody continued on the way down to buy and try to find bottoms in tech and internet. Okay? Continue to do that. While at the same time, they missed a full-fledged bull market in everything else. Right? So that's the problem I find myself in at these times. I get reminded of that 2000 playbook, right? Because the contrarian in me wants to look at tech now, thinking that's where the opportunity may be. And again, on a shorter term basis, it probably is, right? Because you probably have squeeze there. But I don't want to fall into the trap of 99, 2000. And again, I don't think, and disclaimer, the word think is in there, okay? And my thoughts are no better than anybody else's thoughts that is listening on here, okay? So just understand that. But I don't think we're in 2000. But I could be 100% wrong. And not only that, it doesn't even have to be 2000. It could be something similar to 2000. And if you get caught trying to dip by the wrong stuff, right, and bottom fishing the wrong stuff, there's at least that the risk of opportunity cost there, right? Getting stuck in out of favor stuff while there are bull markets everywhere else. So that's kind of what's tugging my brain here, right? That's what's kind of tugging my brain here. I think if you want to if you don't want to rack your brain and use up brain cells in trying to solve that riddle, you stay more of a trader, right? And you kind of just keep the chains moving. The only time you look towards tech and any of this tech stuff is when you get kind of these extremely oversold signals, right? And for me, like and I know a lot of you're going to want to see flow there too, right? Because without the flow, like I don't even want to go near these things personally, without the flow. So that's kind of what we got to wait on here, right? We barely even got out of earnings season. So we really don't have any idea what the flow is going to look like in these areas. But I'm just kind of giving you an idea of where kind of my head is at. While I see trannies already they broke out and they're ripping all over the place. And then you look at software, continuing to crash, and some of these Mag 7 mega cap names, oracles can't catch bids. We talked about too, and I don't want to jump around. We talked about kind of that in between AI space, meaning not the mega cap Mag 7 or the Oracle type names, but kind of you had those other hot growth AI names that are extremely crowded. And they were at risk, if you remember, we talked about a few weeks back, of seeing some aggressive selling. Now you're starting to see they're getting their teeth kicked in. They're getting their teeth kicked in. So again, everybody's going to have their own roadmap and game plan and thoughts on where this AI thing stands and whole blah, blah, blah. I'm just telling you what's going through my mind, being that I'm old enough to have gone through that 2000 shit. And I know what happened in 2000, and I know what happened in 2000. And again, if you think this is 2000, there's no reason, again, if you think, keyword, there's no reason even to look at that overcrowded area of the market and continue to focus and look for opportunities in all the other stuff that's underowned. Because that's where you're going to find your alpha, and that's where you're going to get the big bang for your buck. All right. So that's where it's at. Again, you want to get away from it on a more tactical time frame. I think we could go into this week looking for sweeper activity in anything, but I'd be careful, chasing stuff. I'd be careful chasing stuff, even being that they were aggressively sold. I think even that, let's say for like NASDAQ, tech, software, AI, your better bet obviously is if they see selling. So let's say rallies reverse, right? Let's say tech gets off to a hot start tomorrow because everybody sees this panic that went on last week. They're green, and then they sell them from there, and everyone gets caught in a reversal. When they sell, I think you probably have some better odds and better probability with you because of that panic, they might stay squeezy. All right. How much they squeeze, I have no idea. Honestly, a lot of these names I thought would have bounced already long ago. And not only bounced, bigger bounces. I didn't think the downside was going to be that easy in a lot of those names. All right. Okay, that's just where it stays. Unfortunately, this is, the stuff we have to talk about right now because this is what the market's made up of. It's not clean cut. All right. Anybody who's been approaching this market just clean cut has probably gotten banged up. You can't look at everything equally right now. It's impossible. Again, unless you're staying extremely, extremely tactical on an intraday basis or, extremely short-term basis. All right. So that being said, again, we have market-wide, if we're talking about indexes, we have some wiggle room by looking at correlation and some shorter-term sentiment. But, we have a little bit more of a rally here, and we're going to be right back to where we started before we had any kind of rinse. All right. Let me go through some of the other updates that you guys, because some of you were asking already. Sharpies, they covered some hedges, so another positive thing. Here's Sharpies overall. Again, down here, we were concerned that, especially if the indexes continue to rally, that Sharpies might get aggressive and add hedges on. And that would be a problem. But you got a little bit of volatility, and especially in stuff that people are bullish on. And now you're kind of just hugging zero. All right. So kind of puts a Band-Aid on the Sharpie issue for now. So that's good. Here's what Sharpie data broken down into the indexes look like. You know what's interesting? VIX, they actually added. They're still holding onto some decent VIX exposure. So now they've taken hedges off in equities. They're flat overall, basically, but they still have decent VIX exposure on. That's kind of their protection, if you want to say. All right. Let me see quickly what else as far as here's Goldman positioning indicator, right smack in the middle, neutral. Deutsche Bank, the big picture indicator we like to look at there, hasn't really done a whole lot the last few weeks here. Look, yeah, it's amazing to see like the carnage that's out there in beloved and overowned areas of the market, and these indexes they're not even blinking. These indicators, they're not even blinking. Okay. Here's kind of everything broken down according to DB. All right, so large caps got to get above that kind of quote unquote threshold, but now they're below that threshold. All right. CTAs, before we get into that, CTAs on Wednesday. If you remember, we talked about they breached the 6,900. Okay, that was the short-term threshold, and SPX cracked that threshold. So the takeaway from that, as we talked about, is usually volatility lingers for a few days. Okay, that's why the short-term threshold we don't make that big of a deal out of, because it's short-lived. Okay, the longer term, the more important number where CTAs go from long to short was around 6,700, and we didn't really come close there. Okay, so but according to Goldman, the flows start to tilt bearish now. Okay, so you get some of those negative flows where CTA starts selling in flat tapes. So it shouldn't be a big deal, but if you're chasing green, you got to be careful, because now you have that crowd selling there. Okay, here's the update from Friday, but this is not including a lot of Friday session. So we got to wait for tomorrow's update, tomorrow afternoon, and we'll get a better idea. Hold on, I'll show you right here. I thought I posted this in a screenshot. So over the next week, sellers. But that was before the big Friday squeeze. So probably less sellers, I would think. Okay? Less selling. All right. What else? So CTAs, again, they're not that they're a major problem yet, but for sure they're not bullish anymore. Right? It's becoming more of a concern than a plus, these systematic funds, especially with that vol control indicator popping a little bit. Right? That was kind of what we were holding our hat on. Here's Bova's model. And again, you could download the whole report there I included. Same thing. They were tested. They kind of held the line. They're okay for now. And we'll kind of move with the markets. All right. Because that's a big talk of on the street right now are these CTAs, because they really haven't played a part in a while throughout this whole rally since April. They really haven't triggered, I guess the better way to put it. Here's the updates from Goldman Hedge Funds. Net sold U.S. equities 4th straight week, fastest pace since Liberation Day. Single stocks were heavily net sold, made up 70% of the selling, driven by short sales, outpacing long buys 2-1. 8 of 11 sectors were net sold. Obviously, tech number 1, and healthcare, commercial services, communication services, and utilities net bought. So kind of a defensive thing there. Another thing that I think that kind of surprised me, I mentioned it in my quick Friday note to update you guys. I really thought, like, if we would squeeze on Friday, that once the initial part of that squeeze took place, as we see a lot of times into the afternoon, they would probably start to sell cyclicals, right? Because now you got kind of a squeeze. You get money moving into these out of favor NASDAQ names. Maybe they start to take some profit in the stuff that wasn't being sold. But that didn't happen. And I made the point, like, you've got Staples, which is as defensive as you're going to get, a risk-off trade. Okay, and granted, they're running for different reasons right now. Staples, as we talked about, one of the most shorted groups. But you finally get a risk-on squeeze on Friday. You would think that they would sell something like this if they're moving money into the stuff that's been shorted. but that didn't happen. Again, like trannies, after 1, 2, 3, 4, 5, 6 up days in a row, you would think maybe into Friday afternoon there'd be some profit taking as they look for some of the oversold stuff. But they refuse to do that. And if you look at some of the names in the group, you got huge moves, guys. Like this one, I don't know, Struck's around. I think he played this XPO. He's not in it anymore, unfortunately. But like you're talking about huge bust outs here, huge bust outs. The FedEx and the UPS we've been talking about a lot because a few of you guys have that name. FedEx has gone bananas, right? And UPS is tagging along. You got the the choo-choo trains that have really started to boogie here. CSX, UNP caught some action yesterday. These are all huge breakouts. NSC, Nancy, Sam, Charlie, that's another train. They all look great. Now, again, I say great, great a lot of times can mean they could use a rest. You know what I mean? They're up a lot. But they continue to look strong. Retail has been catching a bid here of recent, and that looks good. Here's the retail ETF. But you got Walmart that's up every day. Walmart's up every day. Target, which has been a big laggard, that's been moving nicely of recent. So even the laggards have started to participate. Okay. Materials, honestly, they scare me now. I'm not going to lie to you. They scare me. That's how much they run. You're blowing through 2 niners now in materials. All right. So as bullish as this group looked, you could use a breather here. And even as most of you know, you've been talking about them recently, Energy has caught fire. All right. So again, it goes back to what I said earlier. Normally, normal market conditions, right? Just let's say we come in, clean market, clean positioning. You look at this and you say, okay, you own stuff in here, you take profit, you adjust positions, roll, do what you got to do. You try not to chase and buy anything too extended and start to look on the other side in the other areas of the market, right? To see rotation. But again, what is in the middle of all that is an extremely overcrowded other side that's been building up for years now. Okay. I think the other thing we can look at is try to, on a name by name basis, look for trades, right? That's kind of what we were talking about. I think last Sunday on the Thursday webinar, XLF, you get one of the cyclical areas of the market that had a pull, like a JP Morgan off a niner or Citigroup off a pullback. And, you gotta trade there, right? But there's not too many places to look for pullbacks. You're just not going to find too many pullbacks. This QXO, which has had nice flow, you got a little bit of digestion there, right? You got a little housing related in there. That's probably what's weighing on it. Okay, but I think again, this is the problem in my head, guys. This is the problem. Now, you get, if we let's say last week, right? You get a rinse, and the cyclicals are included in that rinse. Perfect. There you go. Like that's what you want, right? Boom. You look for opportunities in the cyclicals. But they refuse to sell as a whole. Maybe we get some names here and there. Yeah, I don't want to make. We're just getting out of the heart of earnings season, so you know what I mean. We'll see how that all unfolds here. Let me see. Anything else really important here that I needed to let you guys know? February seasonality, starts a little choppier. It gets a little negative as we get later in the month. But for what does that tell us, right? And like what will be choppy, what will be weak? Will the overall market be choppy? Will certain groups be choppy? Um, ES hasn't gone anywhere. I think ES was flat last week, right? NQ has been a laggard, but really hasn't gone anywhere. Same thing, Russell recently off the niner. Maybe Russell gets a push here. That's kind of what I'm looking. Maybe these small guys offer up some opportunity this week. Because you got a lot of those spec names too came in off the risk off. But I'm looking for quick trades there, guys. You know what I mean? Like I played ONDS on Friday. I've been playing this name off action at decent spots from time to time. Downside niner there. Had some flow. You had a squeeze Friday. But you see where chasing these things can really cause problems. They can cause big problems. All right. I'll give you here's the easy solution to it all. Okay. Let me just touch on some big picture stuff too, because I don't want to leave anything out. Here's I think the most important thing going on this week. You got more earnings, obviously. You got APP, Hood, some like recently hot names reporting this week, which should be interesting off vicious corrections. Okay. But aside from that, you got some economic data this week. Okay. And again, we talked on this, I think it was Thursday. This is the risk, I think, for cyclicals. If you get a crack in the job number or a crack in the economic data, so it disappoints, and now you got definitely the Fed behind the curve, right? Everyone now is stuck on a stronger economy running hot, right? That's the kind of takeaway now. They're going to run the economy hot and try to get out of the debt issue with explosive growth, blah, 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 blah. Okay. They don't have the Fed involved in that picture anymore, which anybody who's been paying attention to the US economy, okay, without stimulus and the Fed, you really never get any growth. Okay. So that for whatever reason, folks think they can pull it off this go around. Okay. But if this economic data starts to show some cracks and you got the Fed behind the curve here a little bit, cyclicals are probably going to have to pay a price over the short term, considering how much they've rallied here. Now, I think that round of selling will be an opportunity and viable because I think the Fed, especially the newer Fed, is going to react to, and get involved to something like that. But because that's not priced in right now, and a strong economy has been priced in with no rate cuts, anything on the other side of that can have an effect on the market and cyclicals. And where you will see that show up is more than likely in financial conditions. Okay. So just to get an idea, like the market doesn't, in other words, financial conditions tighten, the market doesn't have to fall off a cliff or even sell. Here's what happened through the end of 2024 into early 2025 before the correction. Okay. Just so you guys see what we were seeing when we were really cautious before the market corrected last year in March and April. Financial conditions were already undergoing tightening. Okay. They weren't loose and remained loose. They were already in the process of tightening. As a matter of fact, right at the start of 2025, you could see it red and has come a long way from where it was a couple months back. All right. This was the Liberation Day lows. Okay. But this process played out. Now that's what we gotta keep an eye on here, especially if this kind of trend continues, is if financial conditions start to tighten and we're not seeing selling in cyclicals, right? In these parts of the market, there's a risk of that. So that's I think the short term risk of a correction for cyclicals. That's and you're going to go economic data now, data point by data point. So this week, what I was getting at is that you have some economic data, including the makeup of the job number on the 11th. Okay, we were supposed to get it Friday, remember, or a week ago, whenever it was. We get it this week, and you look, you got some other stuff there too. All right, so just giving you guys an idea that these a little more of a risk now than they have been. Really, none of this really mattered because it was the Fed. If the jobs number or the economic data worsened, the more rate cuts were getting priced in. And that ended up being bullish. Right? The market would rally off of that. Here, I don't think the market would rally because there are no cuts priced in. The opposite's there. So that's kind of what I'm getting at. All right, so you have some economic data this week that can possibly shake things up a little bit here. Okay. And let's see, anything else? I don't think anything else here. Oh, here are financial conditions. Here are Goldman financial conditions. So you could get an idea, another look at that. The move, this has been kind of the tell out of the credit markets that there really isn't any concern out there. Everything's okay, whether the equities are up, down, sideways, crooked. Credit doesn't care. You could say that again last week. Market sold off. Move, I think, was actually down one of the days of the sell-off. But at the same time, you got the big rally on Friday, and Move didn't really move. You understand? It was up a little bit, doing the opposite of what here. So yeah, you could see, looks like every other week on this chart, but something to keep an eye on, right? If you get divergence there out of the credit markets, these are credit default swaps. Again, nothing really standing out there. I think that's it, guys. Oh, I don't want to put too much on this because I know you guys, a lot of you guys are watching this on recording. Oh, I see a few of you are on here. I didn't even see that. Let's see. UPS is working. Yeah, UPS is. You can't ask for more than what you've been seeing out of UPS. That's been a horrible lack. But that looked really good. Trainees overall look great. Goldman stuff had the net sellers in software, right? Net seller? No. Yeah. In other words, aggressive shorting in software, Sahil. As a matter of fact, Goldman made the point that you probably have seen the lows for now in software because of the panic that was there last week. Yes. I heard it earlier today, and I even posted on Twitter. Was that you who put it in there, Ed? Thank you. I appreciate that. What Ed's talking about, for those of you who may not have seen it, in market updates, he posted our boy McElligott. Where is he here? McElligott, whatever he wants to call himself. I call him McElligott, but here he is here. Oh yeah, it was you. Thank you, Ed. So he's on Odd Lots, which is really cool. He talks about a lot of the stuff we talk about, guys. Again, in a different language. It's not easy to understand them. But he talks about a lot of stuff. They talk about correlation, how that's been an issue, and how it's hard to get kind of that clean overall selling, what we want, right? Where that correlation sell off, everything sells, vol pops, and you kind of get that nice washout because of how the positioning stacks up in the market. You got just stuff that's been off sides for a long, long time, and they're so crowded in certain areas and the complete opposite in the other areas. So again, nothing new, stuff we've been talking about for a while, but he touches on a lot of that stuff. Yeah, he really is. He really is. I like him. His terminology, I get a kick out of too. I like the way he puts things. At first he'll confuse the hell out of you, but once you get a hang of his his wording and stuff. Hammering home the triple levered impact on the flows. Yep. Yep. You you got so much shit that's been building up on there, and flows have been huge in these things. Huge. So again, like I'm not smart enough to make those calls, and you can see even like McElliott tries to stay away from making those big calls like did we bottom, or is there more selling? Depending on time frames and stuff like that, who knows? Who knows? You kind of wait for that high probability setup and you take a shot. It's kind of how he puts it. But this tech thing got a lot of, like, I didn't even see some of these growth names out there until last week, like the Hoods of the world. Look at this. But these don't even look that outrageous to me. That's what kind of spooks me a little. Like Hood, because of that rally, I guess this is a little crashy over here. Oh yeah, RBRK, part of the software. But literally anything software, you got a crash last week. Crash. Yep. This is crash here. What's interesting, Ed, is you had, like, software's been under pressure and now it's led to a crash, which, and that probably is a good thing for software. I'm talking about like some of the other stuff. Like software's been out of favor for a bit. You got a lot of pain in names like this. In names like this. Right? The Bitcoin stuff. These were popular growth names that just money and players continued to pile into as they kept going higher, and they've been buying dips. They've been buying dips along the way. That's kind of what I was getting at earlier, is that trading is one thing, stop loss, you get out of the way, you can avoid calamity. But you got people trying to buy Hood pullbacks along the way. And they're getting demolished. Demolished. Like, this is, whew. I didn't realize how much selling this Hood was taking on here. But I don't know, to me, yeah. Oh, that's another one, right? And I honestly see, it goes to show you, like, I kind of like this longer term, thinking, if the AI, well, here was the thing. If AI was going to continue to heat up, I figured you buy a name like this at a discount. But it shows you how much I know. I would have got hammered. Here, I think it was here, right? Like, this is, you got crash in a lot of this stuff, right? Crash. Trying to think of other hot. See, these things were bulletproof, and then they got hit last week. Like, these are great names too. These were fantastic names with crazy growth. Do you buy them here? Yeah. All these things, Ed, That's the one problem, and I'm telling you from experience. There's going to be flow in these names, and they could be wrong. You got to understand, there's a lot of smarter money that gets blown up in this stuff. It's not dumb money. It's not dumb money. You think you think only dumb money is getting beat up in Oracle? You got professional money, like real deal players who are buying dips in Oracle thinking the selling's overdone and there's more to go in AI. And the same thing when the 2000 bubble blew up, people buying dips. It wasn't just dumb money. Retail was already lit up after the first pullback there. Look at this. We're talking about Dual and RBRK. You got a Microsoft that's $150 off its highs. So, and that's you just brought up a great point though, Ed. The main problem for a lot of these popular names is that we can't just look at the flow and make a determination off of it, because there's going to be flow in these names. There are going to be buyers. Now, there may not, you may say, well, I want to see real buying. You know what I mean? I want to see that aggressive buying stand out. That's a different story. But you're going to see flow in these names, whether they all fall apart here or they bottom or go higher. These are too popular, and there's way too much money in them. There's way too much money in them. See, what I'm hoping for out of this market is kind of the best of both worlds, and I'll tell you what the best of both worlds would be. The best of both worlds would be more cyclicality. Okay? In other words, all the stuff that's been doing well, the same type of groups, but newer names. You understand? Because that's usually the next stage in a cyclical bull. If this is going to be a real cyclical bull market, regardless of what these AI tech stocks do, okay? If we got the start of a real cyclical bull, we're going to see new potential cyclical leaders show up. And that's where the big money's made at this point. Because now, like the cyclical leaders, they've all exploded here for the most part. They've all exploded. So now we gotta get to that next stage, because you're chasing leaders. Like here was one, we were talking about this last week, this URI. You're fortunate enough to get an earnings sell-off, and they snapped it right back. Look at it. Yeah, like that's the point. Like how do you buy this? I can't buy this. I don't care what you tell me. I can't buy this, Ed. I can't buy a Caterpillar up here. I'm sorry. You know what I mean? I can't do it. And, like, how does Caterpillar not do well if cyclicals do well? I really can't think. I can't really think of an instance of how that's possible. But I can't buy this up here. I'm not a big buyer of these names anyway, but I'm saying even if I was playing these names like Caterpillar from 200 to 700, I can't do it. What's the other big guys doing? Are they look at this. Wow. You see this deer? Look at this. Shot out of a cannon this year. Look at this. I remember we were talking about this name. It was dead money. Look, but it wasn't going anywhere. Yeah. Yep. It's all those names. And and nobody was in the majority of these names. Yes, that note with the watch list, exactly. They had a whole bunch of names on that list, that beneficiaries. Yep. Yep. Every single one of them. Every single one of them. They're not the sexiest names to play at. You know what I mean? Once you get, like, for example, like you raised a great point, that Goldman note was just so well timed because you were wondering what names, right, to keep an eye on. But once that trade hatches, like, what do you do now? You can't keep buying them, right? Like, here are a few names for those of you who do play these names or can play these names, and are looking for stocks that possibly haven't moved as much, that caught some sweeper activity recently. This court action late last week, MMM, this is breaking out, right? You guys know Triple M, Scotch tape. Who knows what else they do now? The chemical names. Now, it's interesting because the chemical names, not to get too macro wonky on you guys, are considered early cycle names. So for chemical names to go into a bull market, that happens at the start of a bull market, when the Fed starts to cut interest rates. Okay? If you're going to play the start of a new bull market, okay, cyclicals, and the Fed are going to cut rates, chemicals, that's the playbook. You buy chemical names. Okay? So these are these names I'm mentioning now. Dow, yes. CC. Now, they report CC. They don't report earnings yet. So that's one thing you got to watch out for here. The rest of them reported because they're all early reporters. But here's CC. Again, the group goes higher. CC's going higher with it. They're going to all go. Hun, that's another chemical name. And you can see them all heating up here recently. This one didn't report either yet, because this is going a little downscale. This is the one here, probably, if you're looking for quality or leader. Dow is up there. Yeah. So these are the laggards right now of the cyclicals that have started to get some attention. But yeah. This, again, invest. All you want to ask me is, has there been flow in the name, and does it fit the bill? Trust me, you don't want to ask me anything else, because I'll end up talking you out of something that, for no reason, you should buy if you like. You understand? And I've been saying that now all year, this year, because I want to stress that, is that if it's cyclical and if it's catching clean activity, that's all you need to know from me. Because anything else I'm going to share, no, possibly negative or to be cautious, you know just as much, if not more, about it than I do. You understand? Like, I want to try to refrain from giving too much opinion, because really we should be focused on is, see, you like a cyclical, it's catching flow. Okay, now where the problem comes in for me a lot of times is it at a decent spot, or am I chasing? Right? If I'm chasing, that's where I just like to be. I'm quicker. I won't hold it. In other words, I'll buy it and I'll look to flip it. But if it's at a great spot, then you know what I mean. I'll put on more size and kind of give it some time. But you see how many winners I miss in this type of backdrop with these names. I miss a lot of winners, guys. A lot of winners from not chasing. So that's why I don't want to impress too much of, my opinion, not opinion, my, what's the word I'm looking for? Preference in trading in general. You know, you understand? Like again, like even like this name, because I remember a couple of you guys, even Tree. You guys know Tree. She was asking about the name, and you know, I made the same point. I said, listen, Hasbro, it's not an easy name to get bullish on, but all I can tell you is it's cyclical, and the sweeper activity was good looking. That's all you need to know from me. You like Hasbro, you shouldn't ask me anything else about it. You know? Because again, you ask, the more people you ask about a Hasbro, they're going to talk you out of playing it. These are stocks nobody wanted to own forever now. Nobody wants to own these things. Yeah, Ed. But cyclical has become boring. See, you know what's funny, Ed, and you probably know this, okay? Recently, cyclical is boring. But in prior bull markets, cyclical names were AI names. They were tech names. You know what I mean? Like the steel stocks, they were never boring stocks. They were market leaders. They were like tech names the way they move. They just recently they become boring because nobody wants to own these things for good reason. Okay, you got to understand. And this started to go into effect in 2021. But even rewind that, COVID hits, you get a global economic shutdown. Literally, the whole entire global economy shuts down. Okay, who the hell wants to buy anything cyclical in that environment? Okay, but the Fed throws in the kitchen sink with QE, so these names squeeze anyway. Okay, but in 2021, they start pricing in the Fed tightening, which they were going to do in 2022. You don't want to own anything cyclical into that. So these names literally from COVID all the way up to recently were on everybody's do not touch list. There's no reason to buy these names. And that changed recently here. That's what's changed. And think of it, you have a whole new retail crowd that was birthed out of COVID that don't even know these names. They don't even know they exist. They thought these names were stock certificate only names that their grandpa owned. You know, they don't know what to do with these names. And speaking of steel names, look at these stocks. Right? I mean, this is again, you don't need to be no technical guru to know like these were just clean cut breakouts. You know? And you know what's funny? This has gone on. You know, this is not new. Oof, man, big moves in some of these things. Big moves. But anyway, the oh yeah, I see you mentioned a couple of trannies there. And the trannies have been on fire. You know, that's why I fool around with the ETF sometimes because I can't find a name to buy. And you know, I know some people who just play the ETFs. They buy some of the ETF and try to take advantage of it that way. Yeah. Do not trade like a tactical green that you're 100% right. You're 100% right. Oh, God, that's great. Well said. That's 100%. That, I told this one, I bust Joe's chops over it. Because that's what he was calling this. It's on his do not trade list. It was on everybody's do not trade list. You know? So anyway, that's the story. One more thing quickly, because there was some news. The home builders, the DOJ, there was news the DOJ is going to investigate whether they were doing some shiesty shit with like Blackstone and all that. I don't know anything else besides that. Could those headlines ultimately weigh on some of these housing related names? Sure. Possibly a headwind over the short term while this thing lingers. Again, we get a headline and then it's going to weigh on them. But they sold initially and they bought them right back. I'm not a big home builder guy, but if you nail the home, it's funny, no pun intended, but if you happen to buy the home builders here and your thesis clicks, you're going to hit a home run big time. You understand? So the reward is so much, it's so worth the risk. Now, again, is there risk? Yeah, there's risk. That's why they've been laggards. That's why they haven't really participated yet. But if this joins the party, okay, they can go from laggards to leaders like this. I've seen it too many times. And that's a good point. That's a great point, Sahil. That might be the way to go. You put on some exposure now if you want, and as it works, you can add along the way because that reward is going to be big time. And it's not just the home builders. Like here on names like you see this like Home Depot. I think if you want to even get away from maybe some of the home building risk, and you just want some of that kind of cyclical housing related pot of gold, this would be a name to look at, like a Home Depot, which hasn't broken out yet. A few of you like this name longer term that is in that basket as well, QXO. And you got some big time money behind them too, right? Who was it, BlackRock or something? Bova, who did the underwriting, is bullish. This is definitely a name to watch. They own two chunks of leaps, 2027 leaps, deep in the money, $5 calls, and something else. But the $5 calls are the ones that caught our eye late last year, somewhere in this vicinity here. It had fingerprints of sharp money involved. And this is like Home Depot, right? Saying that's the type of name. Lowe's looks even better than all of them. This don't look like it's getting ready to break out. See, look at the stock. You're telling me what can you say bad about this Lowe's right now? Honestly, this setup. Look at it. Okay. Lowe's is Steel Dynamics in November. Lowe's is Hasbro in November. Right? All these stocks as they were breaking. Again, they're not sexy names. And you know what else, Sahil, is tough for me? Because coming out of the recent where we picked up all the money last year in small caps, micro caps, equity wise, it's hard to buy the equities. You're not buying much. You're not buying size. You know what I mean? You're not buying size. Like, think about the environment we went from, Sahil. I went from buying 60,000 share clips of a Wolf, BTDR, all these names, right, at $2, $3, $4. And now I'm looking at stocks at 300. Yeah, it's hard enough for me, but coming off that climate and going into this climate, it's not easy to adjust. Yeah, it's a lot. Like back in the day, when you're running a book, you're running client money. These are great names to raise money off of. right? Because the client knows the name, the story makes sense. They're institution names. That's what they are. When institution, those long only funds, when they start to aggressively get long, these are the type of names they get long. These are the names they get long. And that's why these things pull off moves like this, because when they start buying them, there's no selling. Institutions are buying and there's no selling. Yeah. Like, honestly, see here, any other name, I'm not even, I bullshit you not. You know I wouldn't bullshit you. Any other name, if this was at $8 and not 800, I'd be in it in a decent way right now. I mean, it was $800 a share. Now you say buy calls. You could, yeah, that's what you have to do, obviously. But the thing is, you can't get crazy with size calls either, because the liquidity is not great. You understand? The trick with these names, and that's why I say it's more for a book, it's more for professional managed money, these names. You buy baskets of these names. You buy pieces of these names. You understand? So you buy a trainee that you like. You buy a Home Depot or a Lowe's that you like. You buy Steel Dynamics. You buy some Hasbro. So you're spread out across cyclicals and you have exposure. That's what these names are for. So that's what these names are for. You spread out, and you got some cyclical exposure, spread out, diversified. So you're not betting on one particular group, and as they hatch, you get paid. You get paid. But again, I don't want to neg anybody out because who is more like my style or Sahir style. As this bull market gets underway, it's going to spill over. It always does. It always does. And you're going to see more names like this catch flow and show up. You got to understand too, these aren't tech growth names. Not only are there less of these names because they've been out of favor over the years, there are names that don't even trade options. A lot of these cyclical names, some of them don't even trade options, the smaller cap names. So that's the tough part of these cyclicals. There's nothing better than growth stocks when it's the time to buy. There's nothing better. But we got to play the hand we're dealt. We got to play the hand we're dealt. And this is the place to be right now. This is the place to be. I still think, I'll leave it on this note, okay? I still think these names will be tested along the way. You understand? There may be less tests because that's this market. There's less corrections in general, but they're going to need to absorb a punch in the gut. There's going to be something. Right? Financial conditions tighten, or economic data miss, or the Fed is too hawkish. There's going to be something. They're going to get tested. They're going to shake out bulls. They're going to shake out Johnny-come-latelys, right? The tech traders who now have no choice but to chase cyclicals because tech is decimated, and we may be close to that already, right? That's where, if you're having a tough time, getting aggressive, especially with size in these names, if you've had a tough time, that's what I think you gear yourself up for. That spot, may come from higher levels, whatever it may be. But when that time comes, if the playbook is the same, that's where you're going to pick up the money. That's where we're going to have more conviction and feel more comfortable. We just waiting around for that is not easy. It's not easy. So That's kind of where I'm at. That's kind of where I'm at. I'm trying to make some money along the way in these things, trade these things whenever I can trade them, especially on a shorter term basis. But ultimately, when there's a yank in these things and they get tested and people have doubts, again, if everything we're looking at is the same, that's where we're gonna have to pull the trigger. Yeah. Scalp intraday, you have like this is what I've been doing. If I have some cushion to heal in a name that I had a half decent spot on, or I got some cushion, I'll hold it overnight and give it an extra day or two. Now I'm being honest, it hasn't been rewarding to me yet. Honestly, especially the last few weeks. Prior to the last couple of weeks, it's been a little better, but I think it's okay to do that. To try to take advantage of some maybe short-term cushion to catch a little bit more of a move. But I agree. I think it makes sense to be a little more tactical here. Considering that some of these things have come a decent way. And what you mentioned earlier, I think is a great point too. If in a laggard, if you want to wait till there's a little more conviction and then add more as it starts playing out, that's fine. But you gotta have something. You gotta have a piece initially, I think, to do that. At least me, anyway. At least me. All right. To put a bow on things here again, I said I was going to be quick, and then Sahil and Ed show up, and I'm doing the fat with them. But I love it anyhow. Just to put a bow on everything here, there should be squeeze opportunities this week based on how aggressive some of that panic was last week. I think that's where we kind of want to keep our eyeballs. And there's some economic data too to kind of bob and weave. But again, be careful. We got to be a little careful chasing because of that Friday move. We got a little wiggle room in short-term sentiment correlation. We got some wiggle room. One thing I wanted to look at with you guys look quickly. Like you see here, I was looking at this. Okay. Right here. So this is kind of where we got here correlation-wise, right? See how it kind of off that low? And then you had a big unwind initially, but we kind of hung out there a little bit and then got to that warning level kind of into the highs here. You understand? So there could be some room. And even if the indexes don't necessarily move as much, underneath the hood, there could be some bullish momentum. But now we got the other part of the market, not just cyclical. We could look at the other parts for intraday squeezes. Yes, for intraday squeezes as well. Definitely. A lot of small cap names, growth small cap names, probably got heavily shorted, a bunch of that stuff. Here's dang it. I can't pull it up here. I'm going to post it in, I don't know if you guys seen it. It's pretty cool, this scan. I get it from, what's his face? I forgot the name of this service. Hold on. 1 second. I'll post the New York one too. Hold on. I don't know if you guys seen it. Okay. So here, some of the jumps and shorts on the Nasdaq. You can see a lot of names we know on here. Intel, they shorted. APLD, the Soons of the world, obviously. Webull, they destroyed that thing. Wolf. This is Nasdaq. I'll post a New York one as well. All right, when I get off here. All right, guys. Enjoy the rest of your Sunday. Enjoy the Super Bowl start yet? What's the score of the Super Bowl? Not that I care, but what's the score? Anybody have a score? There's something else I wanted to post on here. I forgot what the hell it was. No score? That's all right. I don't care anyhow. We got the delay here for 3-0. There you go. Thank you. Sounds exciting. All right, guys. Enjoy the rest of the night. See you at the Open mañana. Have a good night, everybody.